Hi everyone, Jeff Yastine here. Remember to put some emails in the mail back here. Send me a message at jeff@yastine.com. Also, again, follow me on Twitter and on Facebook. Don't forget to subscribe to our Facebook page. You know, I was talking with some friends and colleagues of mine last week about the COVID vaccine stocks, and specifically about Moderna, the big drug companies, as well as the smaller ones. And the question that we're all asking each other is, basically now that we're starting to see some of these COVID vaccines coming out and they're very close to final approvals, well, now what? You know, is it time to basically take the money and run on this stuff? Has the train already left the station regarding more big gains to come? So let's talk through some of those answers here. I think this is all very important, especially considering yesterday's move by Moderna that you've doubtless heard about already. So number one, regarding has the train left the station, is it too late? My answer is no. You know, a few months ago was when I made my first purchase of Moderna, and I thought at the time that I had missed the boat too. And I'm up about 100%, a little bit over that, after yesterday, after Monday's big move in that stock. Could still see some pullbacks, but the point is, you have to get out there and make at least even a small portion of your funds available to these kind of moves. Otherwise, you just don't get exposed to it. So you do still have opportunities here, but I believe that we do have to expand our field of view a bit. In terms of risk and reward, I'm going to give you a handful of speculative vaccine stocks to look at in this video in a moment. So this is where things get really interesting. How much would an investor pay to own a share of a drug company with a potentially, let's say, world-saving vaccine drug? How much should an investor pay to own it? Well, if we apply a multiple of 40 to Moderna's profits for next year, so that's 40 times $4.67 a share in earnings, then it gives us a stock price of $186 a share now for next year. Now, obviously, after Monday's huge move in Moderna, that may not seem like much. It isn't much. But at the same time, you have to then ask, well, what would be a good multiple on the high side that investors may want to pay? Well, the thing that occurs to me is that, if you look in the world of biotech and tech, there are lots of companies out there that trade in the high three figures that don't even have any profits at all. And they're trading off of things like price to sales ratios and those sorts of things. So this is a company that has profits and will likely have profits for years to come as there's continued demand for the COVID vaccine, as well as a lot of other spin-offs using the same technology that Moderna used to get this vaccine drug into gear, in basically 6 months, 5 months time. So again, going back to the idea of a multiple, if we applied a multiple of say 50 to Moderna's earnings for next year, then that would give us a stock price of around $233 a share, which is about a 50% gain. Still very good for any stock over the course of say 12 months. Obviously, if investors get really enthusiastic about the stock and as it reports earnings and actually can confirm that the business is doing that well, and I think that's what's about to happen here with Wall Street institutions making their bets. Well, if we apply a 60 multiple, again, basically assuming 60% earnings growth over the coming year, then that gets us a stock price of $280. And obviously, if we said, all right, earnings for Moderna are going from zero or losses to $4.67, would paying a multiple of 100 necessarily be that high for this stock for Wall Street institutions and traders who really want to get into it? Again, not talking about today or tomorrow, but in coming months as we see Moderna's story, if you will, confirm what many on Wall Street are betting about this stock. Well, in that case, again, you're looking at a stock that could be a $300 or $400 stock over the next 12, let's say, to 18 months if Moderna can follow through on its COVID vaccine and can show that it's beginning to generate significant profits in that respect. I said I had some speculative COVID vaccine plays. Now, yesterday really put a lot of these up higher as well. Again, doesn't mean they are finished going up. They could still continue to move higher here. And if you're leery about buying the highs, again, buy less now. And if they pull back, you buy more later on with the idea that, again, you're trying not to overexpose your portfolio to too much risk, but you also want to be able to have participation in these stocks as they move higher, as I think will happen. Again, knowing all things have risk to them as well. So the stocks I'm watching include Dynavax, symbol DVAX. It had a run from as low as $2 a share in March to $12 by July, and then it sold off as traders look for other stocks to sort of run up. Now it's back to $4 or $5 a share as one of the also rans, let's call it a junior vaccine stock at this point. But remember that the COVID crisis, as the headlines are telling us every day, is not over, and these and other companies are all working on other vaccines that could potentially work better or be cheaper to produce or perhaps be easier to transport than the vaccines produced by Moderna or AstraZeneca or Pfizer. And it's also possible, the other aspect to all this, it's possible that many secondary vaccine producers may likely get bought up by bigger drug companies down the road seeking access to the more of a cutting edge technology that these companies may have access to. So with Dynavax, you could buy it here in anticipation of another run higher with a trailing stop of around $3.50 a share in case we're wrong. Vaxart, symbol VXRT, is another one that has basically doubled in price off of its lows earlier this month and pushed up above its 200-day moving average, as you can tell here on the stock. You can buy it here. Just remember to keep a wide trailing stop. Buy less now. You can always buy more on a pullback. Novavax is a third idea, symbol NVAX, and as you can tell from the chart, it's already making a run at last summer's highs, and you can use the 200-day moving average as your trailing stop level there as well. A fourth vaccine speculation here is Inovio, symbol INO. And the company ran into problems with its COVID vaccine back in September, which caused it to have some delays moving on to the next phase of testing. But some analysts think that this is a top 10 or in the top 10 among, let's say, vaccine contenders. The stock is below its or nearing its 200-day moving average. It has moved from $8 to more than $12 in recent weeks. So again, you could buy it here, put your trailing stop at $8 in anticipation of the stock trending higher in coming weeks and months. It doesn't take much to get in line for these. So the key is buy small. Look for the profit taking to buy in an additional full position, knowing that your trailing stop is down there someplace. And that if it does happen to fall back to your trailing stop, fine, you exit the stock for a small loss, but meanwhile, you have availed yourself to the broader uptrend of the stock, or what we're betting will be the broader uptrend of the stock. And that's how you put in the bigger gains for making 50% or 100% on a position. It can happen. You just have to get in line and avail yourself to that overall trend as it takes place. If you like what I'm talking about, make sure to subscribe to our YouTube channel, follow me on Twitter and on Facebook. And again, feel free to drop me a line to my email address. It's jeff@yastine.com. I'm Jeff Yastine, and we'll talk to you again.